Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta. We have lots of queries that we're going to get to, but first up, let's just take a look at the markets, which are holding up very steady after the, that solid open that we did get. Currently, it's a 120-point gain from that October 26th low that we've been talking about. We're a full 400 points higher, so things are looking very steady over there. The broader markets also completely in step, actually faring a little bit better as well, with both the mid and small cap index up around 0.7% today and around 2.5% for the week. So, Ekta, a very green looking screen as we get into this weekend.
Hi, Pavitra. Yes, absolutely. We've got some amount of pullback which has come through for the markets. We have the Nifty, which is recovered all the way to levels of around 19,250. So up around 0.6%. We have the broader markets with the mid-cap index up around 280 odd points and an advanced decline ratio which is held extremely steady. So it's held at around 2:1. Consistently on the Bombay Stock Exchange. We have around 2,400 stocks advancing to around 1,300 stocks declining. So as you can see, that gap has been maintained through the trading session, giving us an indication that, there hasn't really been that much volatility or any kind of volatility in today's trading session. But joining us this afternoon, we have Ruchit Jain, who's the lead research at 5paise.com, and Parthiv Shah, director at Tracom Stock Brokers, to answer all of your queries on the technicals as well as the fundamentals. Parthiv as well as Ruchit, welcome to the show. Well, let's get to the first question then. We have Ketan, who writes to us from Mumbai. He holds 100 shares of JK Tyre, which he's bought at around 250 odd rupees. So he's sitting on a profit there. He asks if he should stay invested or sell at current levels. Well, yesterday we saw a very good reaction coming in on JK Tyre post numbers. The stock was around higher by around 7 to 8 odd %. But Parthiv, let's start with you. What would you recommend on JK Tyres?
Good afternoon, Ekta, Pavitra, Ruchit, and our viewers. See, in terms of JK Tyres, especially in the tire OEM industry, JK Tyres as a company, what we've seen in terms of its revenue mix, they have almost 54% revenue coming from the commercial and the farm segment. Especially here, the farm segment was slightly tepid. We know the weakness in the rural segment. And in terms of the passenger line radial tires, they're almost 32%. So I think the categorization of their product mix is reasonably good. They did extremely well, which is the case of most of the tire manufacturers, because in Q2, one was envisaging that with lower raw material input cost, especially likes of carbon black and other raw material which are linked to crude, they were lower. But now the slight concern is that the raw material prices have inched up, especially after the Hamas-related war issues. Now, I think going to Q3, probably we are not expecting as good margins. There will be volume growth, but with lesser margins. I believe that some of the stocks here are kind of priced to perfection. So no harm taking profits here. And if the gentleman wants to stick in the same industry, I would suggest Philips Carbon Black. Again, it's a good proxy to the tire players, and they are diversifying their revenue mix and going into more value-added products. That is where we feel the valuations are very compelling out here, and going in the long run with the added capacities, I believe that good returns can be made.
Okay, got that. That's helpful. Ruchit, what is your view on this? Would you agree with what Parthiv is saying? And, I was just looking at a one-year chart. It's doubled in that time. The question is, do you see more from here, or do you think the best is done in terms of the stock run?
Yes, hi, very good afternoon to everyone. Well, I think technical trend for the stock is still positive. But yes, as you rightly pointed out, the stock has already seen a good up move in last 6 months to 1 year. And on the higher side, the retracements indicate that the potential target, if this rally continues, then that would be around 385, where the retracement resistances would be there. So I think it's a good time to take partial money off the table. And for rest of the positions, because the trend is positive, there are no signs of reversals yet. You can hold on and review the positions again when the stock rallies high towards 385, 390.
Okay, that is on JK Tyre, both the technical as well as the fundamental view. Let's also get to our next query. This is Rakesh, who writes to us from Pune. He says he has 50 shares of NTPC, which he bought at 90. NTPC is currently over 230 rupees. He wants to know the future prospects of his investments and is asking whether he should keep on holding, should he sell, what the correct call is over here. Parthiv, this entire space has, been quite hot, right? This green energy, renewables kind of space. Do you think in that context we're set for more of a gain here?
Oh, yes, absolutely. Even after this run-up that we've seen in a lot of power producers, especially likes of NTPC, I think still if you look in terms of the valuations, it's still attractive. In terms of price to book, it's available at 1.3, and in terms of price to earnings, it's still at around 12. Not only that, what we like about NTPC is that they have also diversified well into the renewable energy space, where they're building up huge capacities, and going ahead, the management has talked about plans to monetize that through separate listing. And not only that, I think NTPC has a core thermal power capacity of almost 63,000 megawatt. They have almost 70 power plants. I think such assets are comparable to none in terms of any other player also in the private sector space. And all whatever we may say about ESG and renewable source of energy, I think India cannot saturate its power demand without thermal power. And new thermal power capacity takes almost 3 to 4 years. So NTPC is a case we are seeing that power load factor and plant availability factor both are going up. So I would suggest he's sitting on a fantastic dividend yield of 7% from his investment at $90. So certainly hold on to this story.
Okay, Ruchit, would you have a view on NTPC?
Yes, the broader trend seems to be quite strong because what we have seen that after this recent up move, the prices have consolidated in the range since the month of September. So last 2 months of consolidation just seemed to be a time-wise correction within an uptrend where we have seen that the up moves were supported by good volumes, but there are no such high volumes, when these minor corrections are there. So I don't think that we would see any kind of significant price-wise correction going ahead now. 220 technically has become a very strong support base for the stock. Until this is intact, one can expect an higher levels towards 260 to 270 going ahead.
Okay, all right. So that's on NTPC. But let's get in another query. We have Shifali, who writes to us from New Delhi. She holds 20 shares of Power Grid, which she's bought at around 200 odd rupees. So she's sitting on a profit on that one. And she's a long-term investor. She wants to know what to do, whether she should hold or sell this particular counter. Well, in the past 5 years, it's rallied quite significantly. Long-term investor here. So in that context, then, Parthiv, what would you recommend? Would you expect Power Grid to probably be a hold from a longer-term perspective, multi-year portfolio holding?
Difficult to make a call on Power Grid for very long term because I recollect, I think Power Grid, if you see a 10-year horizon, despite being the market leader in power transmission and distribution assets, they have one of the highest circuit kilometer lines. And the company has been doing extremely well operationally and financially. But I think for whatever reasons, being a PSU, this stock has been languishing. I think it is not re-rated multifold. The revenue yield is good, but it takes a lot of patient investing in such companies. Rather, talking about this power sector, we are a bit. We just discussed about NTPC, which is more of a utility space. And I think instead of Power Grid, I would suggest Tata Power. A very similar story to NTPC, fantastic asset base, and also they're diversified their revenue base into renewable. They also do a lot of EPC work, and the management is guided that by 2030, almost 60% of their operational profit will come from the renewable side of the business, which is quite enticing. And they're talking about targets of touching profit after tax levels of almost 10,000 crore. So makes it very interesting for a longer term investment horizon. So I would prefer to switch from Power Grid to Tata Power.
Okay, Tata Power could be an alternative. Ruchit, what is your call on this one, on Power Grid? Do you think that this looks good on the charts technically? I mean, I know the entire PSU basket has been doing well, but this is not rallied as hard, right?
It's a slow mover, but we can see that the moves are not usually very sharp, even when markets runs higher. So I think, but still the trend is still positive. We have not seen any kind of reversal in the trend. And in last 7 to 8 months, in this entire market up move, any correction that has come, the 100-day exponential moving average has acted as a good support for the stock. So until we see a breakdown of that supports, I think that slow and gradual up move can be expected going ahead also. 190 is that level where a strong support base has been placed. And since the buying price is quite lower than that, then I think the margin of safety is quite good over here, even at current levels. So I would suggest to hold on, but yes, keep a stop loss below 190 on the positions.
Okay, hold on to this one. Now we're going to talk about a stock which is completely different. We have Anshul Kumar, who writes in from Haryana. He holds 30 shares of Zomato, which he bought at 100. That stock is currently at 112. He wants to know whether to stay invested in new age stocks or not. Parthiv, I know this is a bit of a broad question, but what would you suggest? A lot of them have now been, doing quite well. A lot of brokerages also seem to be turning positive now that valuations have corrected a bit. And Zomato has had a pretty good run for the past couple of months. What would you suggest?
See, Pavitra, fantastic show. We covered very, very old economy, and now we are covering very, very new economy stocks. So we had NTPCs of the world, and now we're talking about Zomato. See, I think Zomato has, I think all of a sudden we are seeing huge traction in a lot of these new age companies. And one of the reasons being that, a lot of these promoters have started talking about better operational metrics and better profitabilities going ahead. So I think Zomato, since the last 2 quarters, we have seen very good results in terms of lesser cash burn, and it gives a lot of confidence to the markets that going ahead, thanks to the fact that a lot of tweaking they have done in their business model, they're charging some extra fees for deliveries. All of that is adding up to help them become more profitable. And some of the reports do tend to indicate that going ahead, Zomato as a company has a potential to deliver EBITDA close to almost 1,200, 1,300 crores. So if that were to happen, I think still there is upside from here. We believe that after the recent run, the stock is priced to perfection. But I think if one has a holding bandwidth of another 2 to 3 years, still more upside can be made in Zomato.
Okay, all right. Well, Ruchit, would you be of agreement? And talking about that, we have a lot of these new age. We have a Honasa consumer also, which is, finished in terms of subscription at around 7.6 times was the final subscription there. But nonetheless, Ruchit, what would your view be on Zomato as well? Any kind of technical up move you would expect?
So if you look at a bit historical data, then post that sharp sell-off from the post after listing, the stock again showed a positive momentum and a breakout from consolidation in the month of April. And since the month of April, the prices have not yet given any close below 50-day exponential moving average. Now that 50-day EMA is placed around 100 rupees, exactly around the buying price. So I think I would advise to continue to hold on with a stop loss just below the buy price, so that there is not much risk even if the trend turns going ahead. And on the high side, 127 and 135. These are two levels I think that one should watch out for. So he can expect levels around 135 going ahead. So hold with stop below 100 for targets of 135 would be the call.
Okay, hold on to Zomato. That is the technical view as well. But with that, it is time for a short break. Ruchit, Parthiv, we have lots more queries. So we're going to come back in just 2 minutes to take you through all of that as well.
Welcome back. Well, steady gains for the markets. We have the bank nifty, which is up around 0.8% also. Just want to point out that on a week-to-date basis, there have been a couple of movers within the broader market. So Vodafone Idea, for example, has rallied around 27% this week. We have JK Tyres, which is up around 15-odd%. Piramal Pharma, which is up around 14-odd%. Dr. Lals, which is up around 10-odd%, and the common thread between all of these is earnings. So all of these companies have reported numbers in just the past couple of days and have seen this kind of up move come through. Morpin Labs also reported numbers last evening, so it's reacting to that. So the stock is up around 1.5% at this point in time. But nonetheless, let's get to a couple of more queries. We have Ruchit as well as Parthiv still with us to answer all of those. We have Dipali Sharma, who writes to us from New Delhi. She holds 10 shares of Lupin, which she's sitting on a profit on because she bought it at around 430 odd rupees. She wants to know what to do, whether she should stay invested or sell at current levels. Well, Parthiv, what would you recommend? Because the stock has rallied 60-odd% on a year-to-date basis. So strong up move that we've seen there. What would you recommend on Lupin in particular, considering that there are big opportunities such as Spiriva Generic, which we've managed to capitalize?
It's absolutely, Ekta. I was about to take your help for Lupin because you're also one of the best judges for this sector. No doubt, I think finally, Ekta, as you've been tracking Lupin since so long, it's taken ages for this company to turn around and also deliver some sort of decent numbers, which did happen last quarter. there was a lot of disappointment in terms of the execution capability of the management, the past inorganic acquisition that they had done, especially that of Gavis, and also a lot of compliance issues in their plants. But slowly, gradually, we are seeing they are getting a little bit of EIRs in some of their plants. And we know for the fact that Lupin's product mix has almost 34% revenues coming from US market. As you mentioned, they have some very good pipeline where there is limited competition. If they can execute that well, I think probably we can see the margins improve further. But more importantly, if I were to analyze Lupin purely on the Indian business, which is currently at 40% of the revenue share, I think over there also they have a huge prospect going ahead. We have seen a lot of Indian-centric pharmaceutical companies do extremely well, get re-rated. But Lupin at around 54,000 crore market cap, the Indian business itself is very nicely valued. So I believe that Lupin has good fortunes ahead. One should be patient here and give it 1 or 2 years. Probably more upside is there.
Okay, more upside in the next 1 to 2 years. Ruchit, what do you think about this one? Would you also, stay in this stock for the next 1 to 2 years? It has already done well.
Yes, I think if has a long-term time horizon, then the worst seems to be over for the stock. It had a long period of underperformance compared to other pharma stocks. But what we are seeing in last 5 to 6 months, the price of moves have been sustained, supported by good volumes. And also technically the structure seems to be strong, where it is showing a good relative strength compared to other stocks within the same sector now. On the higher side, 1230, 1250 would be the short-term resistances which would come in on this stock. But if I look at the monthly charts, then the stock also has potential to rally towards 1400 over next maybe 1 to 2 year period. So hold on for targets around 1400 over a long period of time.
Okay, targets of 1400. We now have Preeti Parekh, who writes in from Pune. She holds 2,250 shares of India Cements, which she bought at 248, so making a bit of a loss over there. She wants to know whether to book her losses or stay invested and hope for better times ahead. Ruchit, the entire cement pack is not done well, but what do you think about this one in particular? And considering that she invested at 248, when do you see a move to that kind of level again?
It's more into a consolidation phase since last few months. We are seeing that whenever the stock price comes around 190, 200, good amount of buying interest is seen over there. But it is unable to surpass that 260 mark, where the resistance is there. So, but after this recent correction, prices are quite close to that lower end of the range. So I won't advise to exit at current levels, but hold on for a pullback move at least. If the stock comes around 240 to 250 range, ideally that should be a good levels, where no one should review again for an exit. But hold at current levels, but certainly review again if there is any kind of pullback towards 250.
Okay, all right. That's on India Cements. Let's get in another query then. We have Chandramoli Swaminathan, who writes to us from Tamil Nadu, who holds 50 shares of Lux Industries, which is bought at around 4,048 per piece. So that's the buy price. And anyway, long-term investor wants to know what to do with this particular holding. What would you recommend on this one, Parthiv? Do you think that this would be a long-term portfolio kind of buy? Would you hold on to it for, say, a multi-year perspective?
Very frankly, I think not a very long-term view on Lux Industries. One of the reasons being that there is some doubt in terms of how good the governance standards are for this company. And that is one of the key reasons why we see a lot of disparity between likes of Lux and Page Industry purely in terms of valuations. And we still prefer a stock like Page Industry in this segment because I think they have all the ingredients to further scale up. And no doubt, surprisingly, the volume growth in this industry was very tepid despite all the bullishness in the consumer sentiment. So hopefully we are expecting a better cycle going ahead. So I would suggest Page Industries over Lux Industries for a longer horizon.
Okay, let's also get Ruchit's view on this. Ruchit, I think, the price that she bought is pretty much close to the all-time highs, and that was a while ago. How do you look at this moving forward?
Yes, I think the buy price is quite high, so it's difficult to take an exit also after posting so much loss. But no, certainly I would advise not to average at current levels, not to put more money in this. Last 7 months, in spite of such a good run-up what we have got in the broader markets, the stock has still not seen any kind of price up move supported by good volumes. So this clearly indicates a weak structure for the stock. So look to have a sell on rise approach in between whenever we see any kind of up move towards 1600, 1500 range. So it's better to take an exit over there and shift to some other stocks.
Okay, all right, Ruchit, as well as Parthiv, we're going to leave it on that note. Thanks very much for joining in and speaking to us. Some important news coming in from a strategy point of view, both for Lupin as well as Zydus, where they have tied up for saroglitazar, which is basically a liver drug that is Zydus's. So they both have, signed up with regards to possibly distribution of it. Well, that's all the time that we have on the show, but do remember that to send us all of your queries and we will get them answered with our experts. Stay tuned. Closing bell will take you through the last hour of trade for the week.